Since 1973, the EIB has invested £165 billion in the UK projects. So that's about 9% of the total amount of investment that it's undertaken during that period. Now, as regards to how is that done compared to other countries, so the UK holds about 15% of capital within the EU, within the EIB. So, you know, on one measure...
Sorry, and it's also how much largest share of EU income?
Yes.
Just 9%?
Yeah.
Okay.
So in one sense, it has received less proportionally than its capital, and that's partly because one of the key objectives of the EIB is to support the less developed areas of Europe and promote kind of convergence, etc. But nonetheless, it has played quite an important role. That's quite a lot of money, investing particularly in things like infrastructure, water, wastewater, urban projects, housing, redevelopment, etc. But it's important, I think, to kind of put that in perspective, because although, so if we take, say, the year before the referendum in the UK, the EIB invested about above £7 billion in the UK, which is a lot of money, and it was very, very important for specific sectors, and we need to be aware of that and not forget about that.
I'm Finance Director at University College London, and I can speak a little bit about our own personal experience of having worked with the European Investment Bank. We secured a loan of £280 million sterling from the European Investment Bank 2 years ago, and that's the largest single loan that the European Investment Bank have made into the UK higher education sector. Universities have been actively working with the European Investment Bank for about the last 12 years or so, so only relatively recently has it been a source of funding for projects in higher education. Over that period, universities have borrowed around €2.6 billion from the European Investment Bank, around 24 universities, and in excess of 30 projects across those 24 universities. Prior to that period of time, the primary source of debt finance for universities was bank lending, in the time when banks were prepared to lend long-term and at attractive rates to universities. That's no longer the case. Typically, bank lending for universities is limited to much shorter periods now of around 5 to 7 years. Where the European Investment Bank is important is in assisting universities with long-term, large-scale infrastructure investments. And in our case, for example, we are using the finance we've secured from the European Investment Bank to help us build a new campus for University College London on the former Olympic Park in Newham, which is a very large scale and a very major development project for us. And the nature of university investments, particularly large scale infrastructure investments that universities make, universities are charities, they're not-for-profit organisations. Typically, these sort of projects do not pay back very quickly, nor do they generate particularly attractive financial returns. Often the benefits are secured over a longer period of time and are largely intangible or difficult to quantify in terms of things like enhancing the value that students get from their experience by being able to access high quality facilities, improving the quality and quantity of research output from universities, and what the EIB offers is one of the few opportunities to secure long-term finance, which is very attractively priced. In our case, our finance was over 30 for 30-year term. There are alternatives, and a number of universities have secured access to the capital markets through bond issues more recently, where long-term, relatively low cost, excuse me, not as low cost as the European Investment Bank, but there are opportunities, but there are difficulties there with that, in that tends to be only available to those universities which have the highest credit rating and can demonstrate that and maintain that. So it's not generally available to all universities, whereas the European Investment Bank, in its record over the 12 years I've talked about, has invested across the range of the sector, so not just the higher rated universities, but actually across all universities, and in a variety of projects that not only assist universities in achieving their aims, but actually serve wider needs. So assist in terms of economic regeneration in some parts of the country and securing additional employment opportunities, which is very much part of what we're doing in Newham.
There is no shortage of capital in the capital markets to fund energy assets. However, the types of technologies that are being developed often come with a somewhat new technology risk, which is new for some institutional investors and some mainstream public project finance investors. So the ability for the EIB to take on some of that project risk and take on some of that technology risk is a major contributing factor that wouldn't be there without it. The EIB has contributed 9.3 billion euros to the UK energy system between 2012 and 2016, so it's a not insignificant amount of money. But it's not really the quantum of finance that is the core factor, as my colleagues have said. It is actually the fact that the EIB has a AAA rating and is therefore able to borrow relatively cheaply from the capital markets, coupled with the fact that it doesn't have a mandate to require it to achieve a commercial return, which allows it to offer slightly cheaper finance than other private institutions. And it's able to take slightly different positions within energy projects, so it's able to take on what are called junior or mezzanine debt positions, which are slightly more risky and slightly less attractive to mainstream investors. I think in terms of within the energy industry, we've seen a major boost for technologies such as offshore wind, which has matured substantially over the last 5-10 years, and that's largely been partly due to sources such as the EIB and more recently the Green Investment Bank, now privatised. They've also taken on some construction risk, which has been really important, and developed some innovative projects such as agglomerating small projects that wouldn't have been attractive to large investors. I think we've also seen a period over the last, since 2008, where credit has been extremely tight after the financial crisis, and the ability of the EIB and also the GIB to provide counter-cyclical finance has been a very useful factor as well.
One of the benefits of EIB is it's I think it was until recently, it's classified as a remote contingent liability. Mm-hmm. So it's effectively off the government's balance sheet. So it's a fantastic money printing device for every nation within the European Union. And I don't mean that cynically, I think it genuinely is that.
Yeah. From a overall London perspective, the EIB support a lot of different kinds of projects in London. You've just heard examples around social housing and universities from my colleagues. Also things like the Tideway Tunnel, our electricity distribution network, improvements at the port of network. So they're important to London overall. Secondly, my role at the GLA is advising the Mayor on Brexit issues, but also managing the EU structural fund programmes. And there, the EIB have been a very significant, as you may know, one of the cardinal rules of EU funding programmes is they must be matched, and you can use EIB funding as match. What's happened over the last two programmes is that across the country in England and Wales, large loan and equity funds have been set up lending money to small businesses, at least £300 million match under the previous 2007-13 programmes, over £400 million match in the new programmes. So they're a significant player there. And thirdly, and perhaps I'll concentrate on this they're lending to Transport for London. So that in particular, where the EIB has been a very important partner, financing their loans to finance Crossrail, the London Overground, the Tube and Dockland Lights Railway extensions.
Mr. Conway mentioned the excellent fund that you put together to help small business, which is a big interest of mine. I mean, is there anything we can do in the new setup to encourage funding through to SMEs, which obviously are very important for the growth of our economy?
I think this will be a very big issue for the government in its upcoming, much delayed, but proposed consultation on the so-called UK Shared Prosperity Fund, which is the means by which the government proposes to replace European structural fund programmes. an important thing to remember about those programmes is the days when they were just handing out grant are long gone. We've got hundreds of millions now tied up in loan and equity funds, which which have fully invested, which are recyclable, and have been a success not just in London but in Wales, Northern Ireland, Scotland, other English regions. So again, one of the things, even if the government does replace structural funds pound for pound, you will still have the question of where the massive co-financing, which has come from the European Investment Bank and other sources, is going to come from. Otherwise, it's not going to work, because you need, our Greater London Investment Fund of £100 million is a relative tiddler, actually, compared to some of the big schemes up in the Midlands, Northern Powerhouse sort of related funding. So, these funds work. They're a very cost-effective way of supporting businesses, and it's not clear yet how this funding will be replaced. Scoping up building up the activities of the British Business Bank would certainly be an obvious option.
Can I ask you whether the UK should establish its own national infrastructure institution? And if the answer is it should, could you say what the benefits would be of having such an institution versus compared with the government stepping in and directly supporting the sort of investment mechanisms that you're looking for?
I think it has in some way. So there's maybe a finesse in your question. Infrastructure UK was founded around the same time as we had our guarantee scheme to provide £40 billion of guarantees to support infrastructure projects. Now, it was founded, I think, within government, so it isn't a standalone institution, but it's certainly one that from my experience, tooled itself up to handle the analysis of the risk and come up with appropriate financial structures to meet project finance. Now, that may be the seed corn of something that could be a bigger organisation post-event. One comment I'd have around both EIB and KfW, and we've experienced both, is that they were both creatures of their time. In competitive terms, they were both founded after the Second World War, and they were both going into really a vacuum, and were able to establish their own processes for undertaking business. Simply inventing an EIB, a single nation EIB with a very developed financial services market around it may not be able to prosper quite in the same way, and there'll be all sorts of competitive debates around what is this thing. So it needs to be whatever is produced needs to be handled carefully. I think my own view would be a pragmatic one that says perhaps set up 7 or 8 of these different institutions with different particular expertise where there's an evidenceable market failure or market shaping role for that institution.
In your estimation, do you see any possibility of the EIB continuing to lend to UK institutions during the transition period? Any of you?
It really depends on the deal that's cut.
Mm-hmm. Right. Although in other areas, the transition period is meant to be same state as
this is a bargaining chip. Yeah. So
yes.
It depends what else is going on.
Right.